Hello and welcome. You're watching Countdown on Bloomberg Mint Live, India's first digital live streaming business news service. These are the top headlines that we are tracking at this hour. The markets are in consolidation mode. The Nifty trades below 11,000. Most sectoral indices trade with cuts. IT index is the top sectoral gainer. LIC's board has approved acquiring a majority stake in IDBI Bank. The move is most likely to be via preferential share route, according to the DEA secretary. And Dr. Reddy's is the top loser on the Nifty after the US District Court rules against it in the Suboxone case. PC Jeweler sees another collapse after it withdraws its proposed buyback plan, says it did not get an NOC from the bankers. And FMCG major Hindustan Unilever will be reporting its first quarter numbers later today.
Well, it certainly seems to be a day that is filled with a lot of negative moves on the markets by and large. Viewers, thanks for tuning into Countdown. My name is Neeraj Shah, and 0.5% off for the Nifty, so it's trading in and around the lowest point of the day. The point is that the mid caps and the small caps have cracked even more, and bags have looked slightly weak. So a couple of percentage points down for the mid caps and the small caps, and the Nifty Bank too, about 0.75% in the red. So that too has had some serious pain points in the session today. The heat map shouldn't surprise anybody. There should be a fair tinge of red, and the green will not be a very strong green, save for maybe IT. So as we said, more red than green. Let's highlight the green first because there's very little green, to be honest. Infosys about 1.5%, and that too has cooled off from the highs of the day. So I must say NTPC is making a interesting move. Tech Mahindra, Infosys, Wipro, clearly showing that IT is right up there. HUL, ahead of its numbers, is doing well. And remember, HUL had a good run last week as well, but currently about 1.25%. But look at the red on the screen. A clutch of stocks down in the red. Reliance is down 1.8%. Reddy, Tata Steel, and the entire pharma pack. So Dr. Reddy's, Sun Pharma, Lupin, the entire pack of stocks has really collapsed in the session today. Bharti Airtel too, down about 3.5%, and ICICI Bank too, about 3.5%. So a lot of pain points in the session today. I just want to bring a couple of stocks out here at the broader end of the spectrum too. PC Jewelers, for example, should come up on your screen out here because that stock has seen a free fall in today's trade. Though at a point of time was down about 28-29%, currently about 24%. You could argue it's off the lows, but hey, hardly anything. It's very, very close to its average day's low for the day today, 24-25%. So that one cracks and cracks big time. And the Hathways Dents of the world continue to slide lower. Both of them down about 8, 9, 10% apiece. 9.5% for Hathway. Den Networks too, about 12% lower. So the pain point really continues for these names as well. Just highlight one key mid-cap trend. One the gainers and one the losers, and then hand it over to Agam for what's happening in the FNO space. Some of the stocks might well get repeated out here as well, but if you just look at the gainers, there is Century Ply, there is IGL, as well as Take Solutions. So interesting moves there, more importantly for IGL, which is up about 4.5%, so good going there. And amongst the losers, DCB Bank continues to grind lower. Somehow, despite the management commentary being very bullish for the last few days or last few quarters, DCB Bank has not been able to strike the right chords and falls another 9%. Jet Airways about 6.5%. And FCEL, never mind the management, never mind the bullish commentary, FCEL continues to grind lower, down about 4.5% at 43. Ragam, what are you spotting in the FNO space?
Well, Neera, the selling has increased over the last 1 hour of trade. So if you consider how the Nifty is panning out in this point in time, let's take a look at the futures there. For the Nifty futures, we'll see that there has been very little increase in open interest. In fact, there is an unwinding, but there has been a weakness, when that we can see on the index. Let's pull up the Nifty banking index as well and see whether or not there are shorts building up, and there are about 2% increase in OI there as well for the July futures. Are we looking at a spike in the India volatility index? Possibly so, considering the kind of weakness that we saw over the past 1 hour or so. So the VIX has surged by as much as 4% as we speak now at around 12.8, which brings me to the change in open interest. Now let's look at the different options where we are seeing substantial change. As you can see on your screen there, we're starting to see more and more calls written around the 10,700, 10,800, of course, and the 11,000 mark specifically in this case, considering we are below that mark at this point in time. And that said, in terms of stocks, bunch of stocks that I'm looking out for, there is an increase in selling towards Dr. Reddy's is one of the big losers on the Nifty 50 at this point in time. There's substantial weakness, 22% added in open interest. That's followed by Apollo Hospitals. Apollo Hospitals, of course, okay, we'll get you that. There you have it. That's also seeing a lot of selling pressure in today's job trade. That's also where we have a near 20% increase in open interest. And of course, Mindtree is not too far away. Mindtree is seeing about a substantial increase in OI, but it is trading in the green for now. And of course, as Neeraj did mention, PC Jeweler, but I thought we could mark this futures activity as well. So while there is intense selling pressure in the cash markets, it's not any different in the futures and options space either. Open interest at this point in time is up by as much as 17%, even as the stock continues to tremble. And I just want to pull up something like an Ajanta Pharma as well, if it's possible. That, along with the rest of the pharma pack, is seeing substantial weakness at this point in time. And Ajanta Pharma is also looking at substantial shorts with the underlying declining by as much as 5.5%. So not a good day of trade, at least for those who are long in the markets, Neeraj.
For sure. Well, let's talk about whether that's a global scenario or just largely specific to our markets, though. As the trades will show, it is indeed a global scenario. The norm of the week, we get your global voice, Mike Ingram. He's Chief Market Strategist at WHIreland Wealth. Joins us right now on the show. Mike, good having you. Thanks so much for joining in. While the markets may be fighting the disappointments and the tensions of the trade war, seems like every given week, while the headline numbers may stay okay because of concentration of stocks, and this is probably there across a lot of markets, we've seen that larger quantum of wealth is getting destroyed. In India, it's the mid caps and the small caps that have fallen. Chinese shares since the start of the year have not been having a good time. In the US too, I was seeing enough social media commentary about how it's becoming a very concentrated rise. What's happening here? What would you be doing currently when you're looking at your investments across the world?
Well, I can tell you what we have been doing. Certainly over the second quarter, we've been taking some risk off the table, if you could characterize that very broadly, and certainly in terms that's been reflected in a rather more cautious approach to emerging markets, where we were generally quite constructive. Obviously, we couldn't necessarily completely anticipate that huge volatility spike that we saw in February, March this year, but it's very, very clear that a strengthening dollar environment and tighter dollar liquidity, certainly within the first quarter, was not a very healthy prescription for emerging markets. And actually what you saw during the course of the second quarter, which I think has exacerbated this, is a general tightening of credit conditions. I mean, if you look at US dollar emerging market debt spreads, I mean, they inexorably ground higher during Q2. Now, we have actually seen a little bit of respite in that department so far this month, but as you mentioned, there's a lot of event risk out there. Trade is certainly near the top of the list. You've got a situation where it's now been impacting certainly policy, and we've seen this of course in India with unexpected rises in interest rates. We've seen it in terms of perhaps a trimming of growth forecasts, and that's now rebounded into earnings. And if you look at the broader picture, take another step back, you'd have to say, well, hang on, the global growth's looking pretty good. I mean, maybe some of the momentum that we were expecting February, March has come off a little bit, but net we're probably better than we thought we were going to be in January. Earnings have generally come through. It's really the risk environment which has changed. A lot of this is down to the different reaction function from the Fed and maybe one or two other investment central banks, but also in terms of the whole geopolitical thing. And of course, President Trump is very much central to that. So, as I said, I mean, the growth numbers look okay. The risk environment has deteriorated, and in this environment, if there is any weakness if the market senses any weakness in economic growth, if they sense any weakness in terms of currencies and earnings and so forth, they're going to pounce on it, particularly in a market which historically has tended to be quite expensive relative to its peers. And India has tended to be a relatively expensive emerging market, so I'm perhaps not quite surprised that it's not feeling much love at the moment.
Right. Michael, what you are anticipating when it comes to the rate trajectory, the interest rate trajectory in the US, and what sort of an impact can it have, say, based on your anticipation on the equity markets there?
Yeah, well, personally, I'm still not convinced that we're going to see four rate hikes. But to some extent, it's a circular question and a circular argument, because you have to factor in where you think the market is going to be in the US. We are still looking at a market intermediated financial system. I mean, the Fed plays a role in that, but it's perhaps not the dominant role, at least not on a first order effect. So it's just reflected in the market. I mean, the market's not fully buying into a further 2 hikes this year either, which is fair enough. A stronger dollar obviously plays into a tightening of monetary conditions as well. I think the thing that worries me is that in as much as geopolitics are driving this greater risk aversion in markets, you then have to say, well, what's the political timetable in play here? And the political timetable in the US are the midterms in November. Now, thus far, Donald Trump, if the opinion polls are anything to go by, has been rewarded by voters, on the behaviour that he's exhibited this year. He, I'm sure, would like to time this so that it has maximum impact by the time that the voters go to the polls in November. So if I follow this train of thought, then you'd have to say, well, probably we've got a few more months of this to come yet. Now, whether or not we get some sort of resolution in and around November, and then we have a good run at the end of the year, I mean, who knows? I mean, frankly, we just have to take this one day, 1 week at a time, look at the numbers, look at the statements, and try to make an assessment of where we should be. One thing's for sure, I mean, there is a higher risk premium in markets at the moment, and I frankly don't think that's likely to significantly fall probably the next 3 or 4 months.
Mark, you did mention that the Indian markets looks a tad expensive to you at this point in time. How does it stack up against the other emerging peers? That said, also, if you have any view about the general elections coming up next year, based on that, what kind of bets and how would you place your bets when it comes to India?
Well, I mean, we don't generally, our firm, we don't generally talk about, individual country allocations, but clearly, the Modi administrations have made significant progress in terms of structural reform. You'd have to say that relative to some of their larger peers, I have to say I'm a relative skeptic on China. I think a lot of people have waxed lyrical about the amount of reform which has been put in place by Xi Jinping, but actually I think that much of this is actually rhetoric rather than real. Clearly, China itself is the prime target for Trump's disruptive trade policies. So it's a tricky one, because quite often in emerging markets you go, well, hang on, where's your big call coming from? Are you overweight China? Are you overweight India? I mean, there are valuation issues for me, I would say, in India, and there are probably some broader governance, some geopolitical issues in play for China. So it's very, very difficult indeed. I mean, the one thing that I'm quite confident of on a net basis is that we definitely don't want to be in a situation where we're aggressively pursuing emerging market exposure at this point in time. As I said, that's not really where we were at the start of the year, but I think it's very easy to make a case for having reduced that, and of course we are not alone in doing that. You look at the flows and the asset allocation, and obviously there were a lot of these were quite crowded trades at the start of the year. But what I would say is that if the Modi government, to go back to your original question, if the Modi government continues on its reformist path, then it will be rewarded. I think certainly a restructuring of some of the banking system, and you mentioned the performance of the banks in your preamble. I mean, that's one of the things that investors want to see. It's a pernicious issue if you don't have, we know this in the West from the last decade. If you don't have healthy banks, it's very difficult to over the long term to have a healthy economy. So that's got to be on the list. There's maybe a feeling that there's a bit of adjustment fatigue there out of Modi, but we need to keep this momentum up. We need to keep this momentum up, and that's how investors are going to get rewarded in these markets, by seeing these sort of structural reforms.
Okay, Mike, we'll leave it at that. Many thanks for joining us today and giving us that perspective.
Pleasure.
It's Mike Ingram. His thoughts. The news at hand: the Board of Life Insurance Corporation of India has approved a proposal to hold up to 51% in IDBI Bank. The board, which met in Delhi, has given this in principle nod. The secretary also said, who also sits on the LIC board, said that the most probable way would be for the IDBI Bank to make a preferential offer to LIC. Nikunj joins us with more now. Nikunj. Nikunj, can you hear me? No, I don't think Nikunj can hear me. Nevertheless, let me just tell you the brief contours the way we have it right now. LIC board has approved holding of the 15% stake in IDBI Bank. It's likely to issue preferential shares to LIC as well. The deal may trigger an open offer. We don't quite know, because LIC and IDBI Bank are going to take a call on the open offer later on. In fact, when we were speaking to Jane Gupta, I think he said it depends really on multiple factors. It's on SEBI's interpretation as well, whether or not the open offer should come in, or whether there will be an exception to the same as well. So remains to be seen if that leads to an open offer or no. That's the other big thing. But as I think I heard Ira say, for a lot of people, this is more a case of a bailout being given to IDBI Bank as opposed to LIC making an investment, which is very smart. To talk more about this, Karthik Srinivasan of ICRA joins us right now on the phone line. Karthik, good having you. Thanks so much for joining in. What have you made of this deal? We'll come to the implications of what it has on ratings in a bit, but just a prima facie view. I mean, more and more that you look at it, more and more it seems like it's more a bailout as opposed to a shrewd investment by one of the largest insurers.
Well, from IDBI's point of view, it is definitely getting capital, which is what is required for it to come out of the current situation that it is. As far as LIC is concerned, I guess time will tell was that a shrewd investment or not. Okay. But more importantly, from IDBI's point of view, as I understand, while I still await for clarity, but the fact that the capital is going to be infused into the bank, so from an entity point of view, that should be good.
Yeah, that should be. And in fact, stay on because I would want you in this conversation. We are also joined by Mr. S.B. Mathur. He's former chairman of LIC, joining us on the show. Mr. Mathur, what do you make of this? While this is all known and certainly doesn't come as a surprise, but we don't have clarity on whether there will be an open offer. There is likely more of going to be a preferential allotment as well. What is your initial take on this deal?
You see, my feeling is I will admit from where that I have been a supporter of LIC acquiring a bank. There were earlier opportunities, but at that time, market competition had just opened up to LIC. Did not find it the right time to buy. But today, now that in spite of so many companies joining in, LIC has retained its position, and the valuations of banks are low. I think it's the right time to acquire a bank. The question of open offer is not very significant. The retail shareholding of the bank is around 5%, I am told. Earlier, my impression was it was 8%. So with just 5% retail shareholding, even if there is an open offer, it will make a marginal difference because all retail shareholders with such low valuation may not tender their shares for purchase. So open offer, even if SEBI does not allow waiver, is not a significant deal. And my feeling is that LIC should not ask for a waiver and go ahead with the offer if regulations so require.
Interesting. Karthik, what does this do? Anything to ratings of an IDBI? Previously government-owned sovereign ratings. You wouldn't have any kind of or large concerns wouldn't be there. Now, while it is LIC, which is quasi-sovereign, and therefore, in that sense, there is no change. But if the eventual game plan could be or would be that there will be a sale of this asset at some point of time in the future, then does that bring into the fore some questions about the rating as well?
No, as you said in your statement itself, the sovereign ownership has already been factored in, and we also had come out with a release a few days back that immediate there is no rating implications, while the sovereign comfort either directly or through LIC is any case factored in. What would be an important rating driver would be how does the standalone performance of IDBI evolves over a period of time. So the focus would be more on the standalone financial performance of the entity going forward.
I completely understand. So Karthik, to your mind, this deal, in whichever shape or form it happens, doesn't really make any changes to the kind of rating that you would give, even if there is a possibility of a change of ownership a few years down the line?
Not immediately. We will see. I mean, how numbers evolve, how does the shareholding change over a period of time. We still need to see the fine prints. What I understand is LIC over a period of time has to dilute its shareholding as well. So let us get clarity on that, and also let the performance of the entity also show some traction.
Mr. Mathur, while LIC does pick up a majority stake in IDBI at this point in time, do you think that it could change substantially when it comes to the workings of IDBI Bank as such? What does this mean? What does this pick up a stake mean when it comes to the leadership and working of the bank?
LIC's role will be, as I understand from what I have heard in the media, that LIC's role will be restricted at the board level. They will not be interfering in the management of the bank, or in other words, they will not be running the bank. We have a very professional CEO of the bank. The team is good. Macro factors improve. There is no reason why the bank, with additional infusion of capital, should not start performing better and improve its profitability. So I think, and once LIC actually infuses capital in the bank, there's every chance of things turning around.
Yeah. Well, I get on board the point of both our experts. Remember, ICRA in about 4 or 5 days earlier anyways mentioned that the LIC deal will not impact IDBI Bank's credit rating, and the current shape and form of the deal doesn't really seem to suggest that as well. Jaben, both of you, thank you so much for taking the time out and joining us and giving us this quick perspective. That's some added opinion on this deal between LIC and IDBI. Well, more will happen, more will be written. Do visit BloombergQuint.com. We already have an initial copy up about this deal, but a detailed piece on what this would mean and what it indicates, not just from a perspective of an IDBI shareholder. There were very few of you present out there who are IDBI shareholders, but more from a perspective of what this means, or the larger implications of a deal like this, wherein LIC, to a lot of people's minds, is bailing out IDBI. Larger implications of such a thing would also be given out. So do stay tuned to this live coverage, yes, but do log on to the website and try and read all that you wanted to know about IDBI. Okay, last few minutes before we get ready for the last 1 hour of trade. Pertinent to get in some companies which are in news as well. Remember, we've been talking about how Dr. Reddy's has corrected a bit. Me and Agam have both spoken about it. There are some pain points into some of these DTH companies as well. Auto ancillary companies, not quite under pressure, and Minda Industries in particular, stupendous run. They've recently acquired 80% stake in a German company as well. Let's talk about this acquisition with Mr. Sudhir Jain. He's the CFO of the company. Joins us right now for a quick perspective. Mr. Jain, good having you. Thanks so much for joining in. The rationale behind this acquisition, sir?
Yeah, we are acquiring IC's RTS 80% of the equity. As of now, balance 20% in 5th or 6th year. Now, this company will do engineering services and provide services to all major OEMs in Europe, as well as Tier 1 suppliers, mainly BMW and Rolls-Royce. Embedded systems and software for electronic control unit, which goes into BCU, etc. Now, 2 years ago, we decided to specifically focus on auto electronics, cockpit electronics, as well as BCUs and ECUs. And this acquisition is part of that scheme. Earlier also, we entered into joint venture with the TTE for reverse parking systems, etc. Now, we are setting up centralized R&D facility in Pune to provide basic R&D facilities for all of our products, particular focus being on auto electronics. So this acquisition will form part of that roadmap and will be integrated with our central R&D facility in Pune.
Right, Mr. Jain, so I believe that in that case, you will have more expenditure come through. So what is the capital expenditure planned out when it comes to these R&D facilities that you planned in Pune going ahead, and what could it mean for FY19?
Yeah, this facility has been set up and is being set up and expanded. So our estimate is to spend about 125 crores in phase 1 in this facility, plus this acquisition which we are doing in Munich, Germany.
And Mr. Jain, if you could just tell us a little more about the kind of auto electronics that you guys will be working on as far as this deal goes. Can you tell us a little more about what kind of segments that you're targeting?
Of course, we will be providing these services for both two-wheeler as well as the four-wheeler segment. And they provide engineering services for embedded systems and software, for electronic control units, for body, for the comfort systems, etc. And further application of this is in infotainment systems, interior and exterior lighting systems, which are our existing products, which we supply to various OEMs in India. So with this acquisition, firstly, our R&D capabilities would be upgraded substantially, and ultimately we will provide this upgraded version of services to the Indian OEMs in the Indian market, and will expand the scope what this particular company is providing in Europe.
Mr. Jain, any projections that you guys are working with as to how this can help the consolidated numbers for the financial year?
Okay, as of now, based on our interaction with the company, today the gross receipts of this company is about 6 million euro, and which we feel can be multiplied 4 to 5 times in 3 to 4 years.
Okay. Well, Mr. Jain, we leave it at that. Thank you so much for joining us and taking us through the plans with the new JV that we have. But we'll move on to one stock which has not been doing very well. And U.S. federal court has barred Dr. Reddy's from relaunching the generic version of the drug used to treat drug addiction. And the New Jersey District Court has asked the drug maker to wait till the verdict is delivered in the patent management case, and by surrounding the same drug. We have Darshan Mehta, who's joining us to give us a little more of an idea about what's really going on with Dr. Reddy's. Darshan.
Well, Agam, if you're looking at what's happened, the stock of Dr. Reddy had rallied almost 15 to 17% over the past few weeks, given the fact that they did manage to do an at-risk launch of this entire drug. Now, what happened was there's this drug called Suboxone, in which Indivior is the patent owner. What happened was Dr. Reddy's got the US FDA nod, and they launched this drug. Now, they did an at-risk launch. What is an at-risk launch? An at-risk launch means that they are willing to launch the drug given the fact that there is still a patent that is pending. So they are willing to risk any kind of penalty that will come in. Now, what has happened is that in the 2 days that Dr. Reddy's had open till the time Indivior got in a court restraining order, they sold in $25 million worth of drugs according to Indivior. And if that is true and Dr. Reddy loses this case, they will have to pay 3 times the penalty, which is close to $75 million. Now, the court in US has said that this restriction will remain in place till the time there is more clarity, till the time this litigation is over. On the other hand, they've also asked Indivior to post a bond. The amount is not decided yet, but in case Indivior loses, they will have to pay that bond amount to Dr. Reddy's. Why is it negative for Dr. Reddy's? First of all, a lot of analysts were building in specific estimates in their EPS for FY19 because of this launch. Now, this is delayed, and probably till that time, some of the estimates will be rolled back, and that is why so you're seeing this big cut that will come in. Secondly, they plan to monetize this drug, and that will not happen because competition will now kick in significantly for this drug, and that
will make Dr. Reddy's lose out on that case? On that back of that news, Dr. Reddy's is down almost 9% in trade.
Thanks for putting that into perspective, Darshan. Let's talk about this and more with our experts. Start off with the technical experts. Brijesh Singh, Senior Technical Analyst at StockAxis on the show, as is Sumeet Bagadia, Associate Director at Choice Broking. Gentlemen, both of you, good afternoon. Thanks so much for joining in. Some pressure on the markets today. Brijesh, let's start off with you. 0.5% off for the Nifty Bank down almost 1%. What kind of trades can one take on the indices currently?
No doubt, we have seen a profit booking in Nifty as well as in the Bank Nifty. But the Nifty, if I talk about from a low of say 10,557 to the level of 11,070. Now, every hurdles which were previous hurdles or previous resistance which were been there, like 10,700 or 10,085, or even the previous swing high 10,929, which was been made in, if I'm not mistaken, 15th of May. Nifty has Nifty crossed that all the levels, and after that it moved up. But the rally of more than 500 points, so definitely the profit booking can't be ruled out. So at the present juncture, only we can say that the previous swing high, that is 10,929 holds on. Till the time we can say for a short-term momentum, it would be bullish. Anyhow, if the strong support lies at 10,750 to 10,780 level. So that movement, the momentum for the higher side, that level should not be get broken. Whereas if we talk about Bank Nifty, 26,060 or say 26,700 onwards, the swing low still is been holding on, and 26,700 plus the Bank Nifty has been quoting. So at the present juncture, 26,600 would be acting as an immediate basis as a support. And the important level to watch for the momentum to continue on the higher side would be 27,450. So at present juncture of time, definitely the profit booking has been there in both the indices.
Okay, Sumeet, good afternoon to you as well. What is your approach when it comes to the benchmark indices?
Hi, good afternoon. Well, I think from morning itself we are seeing some pressure in Nifty and Bank Nifty. Looking at the chart, it seems that I think fresh buying in the market should be created only if the Nifty is able to break 11,000, 11,020 levels on higher side. Once the index is able to break 11,020 on higher side, then one can initiate long positions with the stop loss to be placed at 10,950 levels on lower side for the upside target of 11,100 and 11,150 levels. Till the time the resistance level is not taken away, it's better to avoid long positions. Immediately looking at the chart, it seems that from here on, we can see a fall of 40 to 50 points, in which we can see levels of around 10,000, 900 levels. If 10,900 levels are taken away, then we will see extended fall till 10,850, 10,800, 850 levels. Till the time 10,900 is not taken away, Nifty will move in a range of around 10,900 on lower side to 11,020 on higher side. Either side breakout will give a move of around 100 to 150 points in Nifty. So at present, it's better to avoid long positions, buy on breakout, or if there is a dip of around 20 to 30 points from present levels, then one can initiate long positions with a strict stop loss to be placed at 10,890 or 10,900 levels on lower side.
What about stock ideas? Sumeet, let me come to you first. Your stock recommendations for the afternoon.
Well, I have two stocks for the day. The first one is on buy side and the second one is on sell side. On buy side, one can initiate long positions in Tech Mahindra. The stock is looking strong. It seems that from here on we can see a move till 670 or 680 levels in next couple of days. So for a trading perspective, one can initiate long positions at the current market price with the stop loss to be placed at 635 levels on lower side for the upside target of 670, 680 levels. The second stock for the day is on sell side, and that one is Bharti Airtel. It's looking weak, and what we have seen on charts is a selling pressure at higher levels. Now looking at the chart, it seems that the stock can move down and touch levels of around 335 or 330 levels. For a trading perspective, those who have taken sell positions, they can hold on the existing sell positions. Any bounce back from present levels till 350, 352 levels should be used as selling opportunity, with a strict stop loss to be placed at 360 levels on lower side for the downside target of 330 levels.
Right, and what are the stocks that you're looking at this afternoon, Brijesh?
See, the first buy call would be from a Titan. Now the Titan has been trading with lower top and lower bottom formation on the hourly chart. That pattern has been broken, so which is giving a bullish sign and higher bottom formation has been found. So at present, somewhere around 830 or 828, the stock has been quoting. So at present rate or any dip somewhere around 825, one can take a buy call in it with keeping a strict stop loss of 810 and look for the target of 855. So anything above 855 on closing basis, another 20 to 30 rupees can be seen, but that would be a positional bet for at least for 4 to 5 trading session. And another counter would be Berger pains, the lower high formation has been formed on the chart, which is giving a negative sign followed by the increase in volume. So right now at 299 or say anything rise somewhere on 302, one can take a sell call in it with keeping a strict stop loss of 307 and look for the target of 288 to 290. But the important support level here is 285. If that thing been broken and if it trades below that, then another say 10 to 15 rupees can be seen. But at the present juncture of time, any rise can be used for for selling this stock.
Okay, Sanjiv Bhasin, Executive Vice President for Markets at IIFL, with us on the show. Sanjiv, good having you. Thanks so much for joining in. Is it pouring as badly as it is in Bombay?
Yes, Neeraj, we've got a welcome bout of rainfall, and even though it's been far and fetched and delayed, but Gurgaon is really having a very, very good fall of rainfall. And I think it's across the country, so too much pessimism, rainfall is getting good cheer. I think the month of September should turn out to be very, very good for the broader market, which is sulking. And I think this is a very good time to put money to use.
Very interesting. You know, I feel, Sanjiv, that I'm in London right now, and not because of any other reason, but for the fact that I'm thirsting for sunshine and not getting it. But nevertheless, that notwithstanding, why is it that this confidence, Sanjiv, around the mid-cap rally starting to come up? The reason why I ask this is because the results season, while we would have wanted it to start with a bang, at least the ones that have come out till now haven't really set the stage on fire. The 2 or 3 notable ones have kind of gone off the boil, right? Banks haven't done that well at the start of the earnings season. DCB, Karnataka, etc. all had a miss to themselves. The numbers that have come out over the weekend, save for 1 or 2, haven't particularly looked the greatest. And Infi too, while it didn't disappoint too much, didn't quite do a TCS.
Yeah, so 3 months back, everyone said Nifty may not ever see 11,000 in 2018. I can stretch my neck out. This is just pessimism at its highest. Nifty is headed for well beyond 11,500 by the end of the year and more. And I think the mid-cap carnage may be definitely coming to an end. Now, obviously, there will be a few stock sectors which you are seeing. But look at the broader picture. TCS, Reliance, Infosys, IndusInd Bank, and you have a whole gamut of other mid-caps which can start to perform, in the sense we've not seen the results. So, you know, it's like it's the dog and the tail. So I think that before the tail wags, it is definitely going to be a time to buy. Now, obviously, you were first pessimistic on oil, you were pessimistic on US bond yields. All are in your favor. So why the pessimism? There is going to be a good monsoon. Food inflation is going to be under check. I think maximum there can be one more rate hike. And I think growth is picking up on the credit side, on the expansion, on the corporate side, on capex expansion. So I am not in the pessimistic camp. I continue to think that this is the time to buy mid caps, and you watch September onwards, you will see a very, very good rally which will have the broader market outperforming.
Sanjiv, can you talk about specific ideas that you're looking at this point in time in mid caps which have corrected substantially and offer very good value at this point in time?
Yeah, so 2 names off the cuff which we've just started covering. Pidilite, which we think has got beaten out of shape. We think numbers and margins should pleasantly surprise on the upside. Bank of Baroda, again, where we think most of the provisioning downside may be done with. From the management, we think that write backs could be the order of the day, and we think their net interest income could surprise, you know, because most of their new credit credit loans have been done at the higher end of the benchmark 10-year bond. So these are two ideas. Otherwise, Havells, Voltas, Exide India, IGL. I'm very, very bullish on mid caps. On large caps, you have L&T Finance, Ultratech, Hindalco. They are giving you very, very good entry points, and I think that they will outperform in the next 6 months.
Sanjiv, a few stocks which are newsmakers. I don't know if you got a chance to see all that's happening around the Kesoram AGM, and I don't know if you have coverage there or no, but if you do, if you are yes to both the things, what is your view here on Kesoram?
No, I have not been privy to the recent news, but it's been one of the. It's a BK Birla stable company. It had tire and both cement in it, but I have not been privy, so I will not be able to opine on that. In the recent past, there has been some misgoverning or mis-issues on the AGM which were raised. So Neeraj, I won't be able to pass a judgment on that.
It's fair. I wouldn't even want you to do that. Okay, let's leave that out. Sanjiv, I'm just looking at the broader end of the spectrum, and very few, I mean, as you said, pessimism at its height, very few gainers right now, but the list of losers is brisk and wide. DCB Bank, 162, now down another 10%. The management sounded fairly confident last quarter about executing a few things right and things turning around in a hurry. Somehow it's not quite shaping up the way Murali Natarajan is trying to convey.
Correct. So that has been a big disappointment. But, if I could suggest 3 names where there is a fair amount of already pessimism built in, it would be 3 of the PSU banks. PNB to start off with, I think the right backs and the provisioning reduction could be sharply lower. I don't rule out targets of 85 to 90 on that. Bank of Baroda, which I just recently mentioned, again, a right back, better net interest income, could again see this stock closer to 130, 35. And State Bank, where again I would say that definitely they would pleasantly surprise on the upside. Again, a target closer to 270. I would rather be with 3 of these PSU banks. Then, then I get more clearance on DCB and the road ahead. Because like you said, the DCB has been a big disappointment this quarter.
Sanjiv, after months, there was some respite which we saw in pharma stocks last month, where there was a little bit of an up move in several of the leading pharma companies. But it seems that it's again starting to, wear off, and we're starting to see some more weakness come back in, especially in the likes of Lupin and Dr. Reddy's, along with perhaps Cipla to a certain extent. What is your approach to this entire sector at this point in time?
So my call would be for the next 3 months, try and do a SIP and do a SIP on a weekly base or on a monthly base, but don't miss the wood for the trees. I think the worst of pharma may be done with. You've got one ironic case on Dr. Reddy, which has seen a 9 to 10% fall. I think the fall may be unjustified because their other businesses, particularly in Russia and the surrounding area, is doing extremely well. Locally, their business is progressing well. This one-off case again would be disputed in the next 3 months, and there could be a resolution. But the broader market, whether it's Cipla, Lupin, Sun, DV's Lab, Aurobindo, all of them I think are looking very, very good, and I think numbers should actually beat estimates on the upside. So I don't know where the bottom is, because there's pessimism since they've seen a lot of a huge rally from the lows. But I think doing a SIP here would be an ideal way since they become a good proxy to a weak rupee and changing fundamentals for the positive on the FDA side.
Interesting. Sanjiv, you mentioned IGL in your opening thoughts as amongst the companies that you believe people can make a fresh investment in. It's a stock that is the top gainer on the NSE 500 today. I mean, has the rationale changed from what it has been, which is the slow and gradual opening up of different markets, which just promises endless growth in business to IGL? Is that the basic thing, or are there some other developments, including pricing, that could make a faster move for a company like IGL, or for that matter, conversely, even in MGL, which was beaten down black and blue?
Correct. So, like you said, both those parts, and thirdly, I think gas utilities have an inherent positive, given that volumes are definitely on the uptick, and their reach is, only strengthening day by day. So top of the line would be GAIL, and GAIL, IGL, MGL in that order. I think they make for very good investments with a slightly longer term point of view. Like I said, you've not spared anything to be beaten down, whatever the shape of the mid cap. And I can see a lot of bargain in all these three gas utilities. So, like I said, this is a very opportune time to buy these three. Businesses are very, very steady. In fact, it's more of a monopoly. And as you get more reach and more volume growth, I think you'll find them in a very, very sweet spot in the next 1 year.
I want to stay on with the gas, sector, and this time, of course, considering we've seen that sharp drop in crude after developments across the globe, we're also starting to see some traction back in OMCs. What's your approach here now, and how would you rate them?
So HP, BP, IOC in that order stand out. I think the pessimism was overdone. They've not had to counter with too much of subsidy or price. They've been in line with sync with prices. We know that this is an election year. There can be a little bit of pressure, but according to me, come the month of September, you may see crude again trade below $70, and that will be the final icing on the cake. So right now, I would say there is too much of pessimism, and valuations have been getting more and more cheaper. I'm not saying that they are going to, this could be the bottom, but pessimism always overstretches itself. So like I said, for me, HP, BP, IOC in that order would be the pecking order to keep accumulating these three. And you are in one of the most visible businesses which is growing across the board. You can add an Engineers India again, which will become proxy to huge expansion in both the hydrocarbon and the petrochemical cycle of the OMCs.
Okay, Sanjiv, appreciate the candidness, and I'm sure a lot of bulls would be hoping that what you're saying turns out to be true. If the Nifty were to head to 11,500 and broader markets perform well, then well, we could have a small party at our hands. Thanks for joining in today and giving us that perspective, and enjoy the rains. Well, if you're in Bombay, then be careful. It's really pouring right now, as we can see from our windows. But before we move any further, let's put the focus on some macro data. India's wholesale price inflation for the month of June stood at a near 5-year high. Inflation for the month stood at 5.77%, according to the Commerce Ministry website. A Bloomberg poll of economists had estimated the figure to be at about 5.23%. The print was for June was the highest since December 2013, when it stood at about 5.88%. Rising fuel prices was the primary factor behind the rise in wholesale inflation, while food inflation for June rose 1.8%. Wholesale inflation for the month of April was revised to 3.62%. So, well, if you're an inflation watcher, then the recent prints would have gotten you thinking about what the Reserve Bank action could be like, Agam.
Yes, absolutely. I think that is going to be something of a challenge for the markets going in. But I'm going to move on to the other sector, which has been buzzing over the previous, well, should I say, few weeks at least. Of course, the Nifty Media Index, which has dropped almost 11% in the last 1 month. But, DB Corp may have shrugged off the selling pressure. Here's Saloni Dhanuka, who's pulled up some interesting data on DB Corp and what it means when it comes to some of its peers. Saloni, it's over to you.
So Agam, DB Corp is not only the best performing Nifty media stock in last 1 month, it has also outperformed its peers. Like we can see here on the chart, DB Corp, which is the white line here, it has risen almost close to 5% in last 1 month, while the likes of HT Media, Hindustan Media Ventures, Jagran Prakashan has fallen close to 5 to 20% in the last 1 month. Now, as do remember, company has announced their buyback plan last month. month for up to 92 lakh equity shares. Now, despite the run-up post buyback announcement, the stock still trades at a price-to-earning multiple of 14 times, which is a discount of nearly 30% to its 5-year average. That apart, it has been a fundamentally sound company with low debt on their book, along with high return ratios as compared to its peers. Additionally, 13 out of 19 analysts tracked by Bloomberg have a buy rating on the stock with an upside potential of nearly 15% from the current market levels. Now, the final question remains, is there more upside to DB Corp given the strong fundamentals that the company has?
Okay, Saloni, thanks for giving us those details. We'll be watching out for DB Corp as we move in. Yeah, and with that, we're going to slip into a short break. But before that, let's hear what Sameer Arora of Helios Capital and Rakesh Arora of Go India Advisors have to say about the uncertainties that are plaguing the Indian markets. This is what they're saying. Listen in.
Right now, I still think, the large cap or quality side will outperform only because we are in an uncertain period, where you have from regulatory and otherwise and margin calls and strong returns of last year in mid cap, small cap, all that has to narrow down. So this relative performance may be not as stark, but I still think that mid cap, small caps will underperform large caps, because right now you're also uncertain about politics and all these regulatory things, and what if they stop every NRI from having a fund? I mean, imagine a country which says that only I doubt that my own countrymen are bad, but even PIOs are okay, foreigner is okay. If instead of me, my secretary owns these shares, India will be fine with it. Imagine this environment. So right now we are hoping that these things will, all adjust. But imagine the state of paranoia that is being created.
Zinc has fallen 20% in a month. I don't think anybody was building that kind of scenario. And there's a potential that it can fall further because the cost curve, most of the companies are profitable still. So I think the marginal cost curve for zinc is around 2,000, 2,100. So it can fall another 15-20% without breaking an eyelid. And most of the estimates are about $2,800 to $3,000 per level. So clearly, Vedanta's earnings and Hindustan Zinc earnings can come under pressure. Coming to Hindalco, aluminum prices have fallen. People were not really that, bullish on aluminum per se as they were on zinc. So maybe the downgrades will be limited. Plus, a large part of the earnings come from rolling business in US, which should be doing okay. And they are also integrated on alumina, where prices have shot up quite a bit. So Hindalco better than Vedanta and Hindustan Zinc at the current juncture. But overall, I would say that earnings upgrades for Hindalco also will be difficult. Some of the stocks are reaching to that level, like ACC Ambuja, but they are not growing as fast as the other companies like Ultratech or Dalmia or Shree. So to that extent, there's a differential valuation between these companies. But overall, the thesis which everybody was floating around, that there would be demand supply mismatch will reduce and we'll see a bull run, that scenario looks far out. I don't think it is playing out in the next 2 to 3 years. And cement demand has been strong from infrastructure sector, but real estate, which is the mainstay, and has been kind of dwindling. So I don't see anything changing for the cement sector in the near term. There could be some relief rallies, but valuations are still very high, and I think investors will better off wait for these stocks to correct further.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you. Do you have analysis paralysis, a case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
You need a lot of patience into the next industry cycle.
Short-term pains for long-term gains.
Buying is complicated. Selling is 10 times more complicated.
If making money for investors were an art form, these folks would be maestros.
Statistically speaking, there is likely to be a big drawdown sometime in the next 6-12 months. Is it much more difficult getting stocks right now? I think that is the basic nature of investing.
Equity reflects the future earning potential.
Circle of competence, one of the most important concepts in investing.
Biggest risk that investor takes is when he pays the highest valuation at the highest margins.
Get in on a conversation on the art of investing with India's top portfolio managers on Alpha Moguls. Thursdays, only on Bloomberg Quint.
Welcome back. You're here with Countdown. About 28 minutes left for the markets to shut shop in today's day of trade. And along with that, if you can pull up, your major indices and see what they're doing. Well, at least as far as the Nifty is concerned, it's trending even lower at this point in time. In fact, trading at day's lows. So not too much to speak for. It's the same for the Nifty Banking Index as well, declining further by another 1%. Shorts building in and more weakness coming through for the broader markets as well. So on the whole, not looking so good. But with that, we'll move and shift focus to another sector which is in focus. And the cable and the broadband service providers are bracing for fierce competition. And now that we also have Reliance Jio Fiber, well, there is going to be a lot of changes and in terms of expectations. And once again, we have Saloni Dhanuka joining us to give us a perspective. Saloni, why don't you take us through the trends that you have witnessed?
So share of cable and broadband service providers have actually extended its losing streak for the third straight session today. All these stocks, be it the likes of Hathway, GTPL Hathway, Den Networks, have fallen in the range of 8 to 10% in trade today. Now, as you can see in the chart, we have plotted their stock performance since 5th of July. Now, this is the time when Jio announced its plan to get into fiber-based broadband services. Now, this is a competition coming from a big players to these companies, and looking at the stock performance, all three stocks have declined close to 20 to 28% since 5th July, that is since Jio's announcement. Now, if you look at their year-to-date performances, both Den Networks and Hathway has turned out to be the worst performing stocks in the Nifty Media Index, and it has been down close to 60% for Hathway, and Den Networks is down about 52% so far this year. Now, when you compare these stocks in terms of their valuations, in terms of EV to EBITDA, that is their enterprise value to EBITDA, that is their operational margins, Den Network trades around 3.6 times, while GTPL trades at 3.9 times, while Hathway is around 5.5 times. But given these valuations, these do look cheap as compared to their historical average. However, according to Rohit Dukania, who is the analyst at IDFC Securities, he believes that, however, the valuations now looks attractive, but given the future EBITDA growth, given Reliance, how aggressive Reliance will be in terms of their launch timeline as well as in terms of offers, we'll then be able to decide whether these valuations are the bottom line for these stocks or there's more downside to these stocks. Angam.
Well, this is interesting. Thanks a lot for that, Saloni. So, well, let's just putting into perspective the kind of destruction that's happened, and post this destruction, what's the kind of valuation that some of these companies like Den and GPTL and Hathway are trading at? EV/EBITDA 5.5, 3.5. compared to historical averages. Sure, these stocks look cheap. The question mark only is, can there be an earnings growth, or will it just be sustenance, or will it be a decline? And therefore, it becomes very difficult to take a call. The last few days, they've just been clobbered and hammered and gone out of shape. T.S. Harihar, Chief Executive and Founder of HRBV Client Solutions, joins us on the show. Hari, good having you. Thanks for joining in. Just a quick thought on these names. I mean, would you even think of touching them with a barge pole?
Not exactly, because I think apparently the whole worry seems to be after Reliance's massive, I think, the broadband plans. And, you know, see, we all know the way Reliance operates, you know, the way they look at scale, the way they would literally, you know, probably finish off most of the competition. So I think most of these people are going to be in for a very tough time. See, what happened to telecom in the last 1.5 years since Jio came in? I think almost all the smaller players are gone. Among the top 4, I think 2 are going to merge, so there will be 3 left. So I think something like that should happen on the broadband space also. So
these are large players, right? I mean, Hathway and Den are not the smaller ones. The smaller ones are the other ones.
Well, compared to Reliance, anybody is small. So,
yeah.
On a relative basis,
so are you saying that it will be a virtual monopoly?
Close to that. Yeah, I think specific fiber net, what they're talking about, I think it will be a monopoly. Because I don't think there is anyone who is close to doing that on such a scale. Hathway does it, GTPL does it, but it's a much smaller regional scale compared to what RIL is planning.
Okay, well, I actually do want to take stock of what's happening with Tata Motors. Not only is it trading at another low, today it hit an intraday low of 250. It continues to grind lower, well below its 50, 100 and 200 daily moving averages at this point in time, taking a hit of another 4%, and there has been tremendous weakness. I'm going to do a technical check on this one. So Sumeet, I'm going to come to you with your view on Tata Motors. Do you think that we could see any respite for those who are long on Tata Motors at some point, or are you expecting this weakness to continue? Because clearly by the chart that I'm looking at, of course the trend is lower, but how are you reading the underlying technicals?
See, charts are weak. On every pullback or bounce back, we have seen a selling pressure. Now, looking at the charts, monthly chart, weekly chart, all the charts are showing weakness. Immediately on monthly chart, there is a support at around 250 levels. If these levels are taken away, this is a 5-year low. If these levels are taken away, then there is a possibility that we might see extended sell-off till 220 to 25 levels. I think it's better to avoid long positions. Those who have taken short positions, they can hold on the existing long positions. Let the stock give some signs or some reversal or some pullback from low levels. Then only one should initiate long positions. Till that time, we don't see any such signs. It's better to avoid long positions, because on every pullback, we are seeing selling pressure, and from there, we are seeing new lows.
Okay, so that's the case for Tata Motors, and Tata Steel is the other one. So I'm going to get a technical check going on that one as well. Can we pull up Tata Steel and see how that one is behaving in trade today? Of course, it is weak, along with several other metal counters in the pack. Continues to grind lower, down another 6.6%. Brijesh, I'm going to take up Tata Steel with you. Would you expect it to move in tandem with something like a Tata Motors, more weakness in store for Tata Steel on technical levels?
See, we can't compare Tata Motor with Tata Steel. See, Tata Motor on a weekly chart had been trading lower tops and lower bottom formation from 420 or say 440 onwards. Now, the 280 was a previous swing low from where we have seen a bounce back till 305 or say 310. Again, it went down and broken his 52-week low and made a 52-week low somewhere around 250 or 252 junction. Purely from my investment point of view, if someone has been concerned, 190 and 220 are the important supports, and on the pullback side, 300 and 335 would be the crucial resistance zone. So at 335 again, stock has a chance of going all the way to 385 to 400 level. But this is, I'm looking for purely for an investment, and that too 1.5 year point of view. If I compare with Tata Steel had no doubt on a weekly chart, stock had been trading on a lower top formation, and the previous swing low of say 535 or 538 had been broken. The stock has been trading in somewhere 522. But if I consider it as a support level, it has a support at 505 to 507 zone. and the important support zone is concerned that and 475. So till 475 doesn't break, I don't think so the stock can go down below that. So as a trader, someone has been looking, then at present juncture, any day somewhere of 525, one can go for a sell side with keeping a stop loss of say 538 or say 540 and look for the target of 505 to 507 on level.
Fundamentally, Hari, steel companies, forget the base metals.
See again, I have liked steel for two reasons. One, I think we believe that irrespective of whatever happens in terms of Chinese supply, the domestic demand is going to be so huge. We are talking about 3 times the domestic demand by 2030. I think that should hold most of the steel companies up. While as you rightly said, the base metals should still have the typical global cycles, the China syndrome. I think steel by itself should be a very good standalone business. Tata Steel, probably the worry was that it had run up kind of too much in a very short period of time. So I think some correction is on the cards. But I would believe that whatever price it's at 520, 530, it seems to be, to me, at least most of the downside risks seem to be factored into the stock.
Interesting. The other large cap that is ailing really badly now is ICICI Bank, right? It hit notes on a price tick somewhere around 290, 280 when this whole issue came out. For the last few days, it's been under the eye of a storm. 260, if I'm not wrong, currently, or probably even lower than that. So I know you can't argue valuations out here. Valuation-wise, it will probably look as attractive as it has ever looked. Is there still merit in investment?
No, I don't think so. I think, see, I think the whole problem is the question of valuation comes when you have a clarity that, the earnings is kind of reliable. And the earnings will be reliable when the NPA, picture is fairly clear. The problem ICICI Bank is facing is on a daily basis, there are some skeletons that seem to be rolling out of the cupboard. First, there was the corporate governance issue. Then there was the question of what I would say scratching each other's back. And then came the issue of these, so many accounts which have not been classified as NPAs, which should have been NPAs. So I think there are too many skeletons coming out of the cupboard. And till that completely happens, I don't think any foreign investor or any large, FII would be very comfortable. I know that Temasek has invested a big deal in ICICI Bank in the recent past, but I think that could be more a kind of an averaging of cost. But I don't think that fresh investments are really coming in from an institutional perspective.
Right, Mr. Harihar, what have you made of Infosys earnings at this point, and how does it now stack up against TCS?
It's already been stacking up quite badly. I was just looking at Infosys versus TCS from 2009 onwards. Right. I think in 2009, the Infosys had a market cap which is about 50% more than TCS. And today, TCS is a market cap which is about 120% more than what Infosys is. And if you ask me one reason why this happened, I think it's the way they manage their margins. TCS has kept their EBIT margins constant at 27%, whereas if you look at Infosys, it was about 36%, it's down to about 24%. So I think that has not gone down well. And I think there are bigger issues on the digital exposure front. Like, for example, TCS has done very good in the BFSI front this quarter, but Infosys actually has taken a hit on the BFSI. Right. And we're not too sure what's going to happen to all the acquisitions that Vishal Sikka did. Panaya, they've taken a hit of 280 crores this time. So I don't know how many more such hits are going to come. So there are a lot of uncertainty, and then the way I would say passing the baton has been handled at TCS and how it has been handled at Infosys. TCS has been smooth, Daraswamy to Chandra, Chandra to Gopinath has been absolutely smooth. Look at what has happened in Infosys. It's been absolutely a kind of a tumble down, rough ride. So I think all that has not gone down well. I'm told the gap is about 10 times in terms of PE between Infosys and TCS, and I would believe at least for the foreseeable future that the gap should last.
Interesting. What did you make, Hari, of the numbers from DCB Bank? And so there are 2 or 3 these. I'm leaving out Karnataka Bank, leave that out. Federal Bank, DCB Bank, Federal Bank numbers come out tomorrow, DCB just come out. What happens to these? They're showing a lot of promise. Somehow they're not able to go on to the next leg.
See, I think at some point they'll have to decide whether they're going to run with the hares or hunt with the hounds. And I think that is the big challenge for all of them. The whole problem is, I think, they may be profitable standalone. And I include RBL Bank in that bracket. See, they may be a profitable standalone. But then if they have to compete with the likes of a Yes Bank or an IndusInd Bank, they'll need scale. And I think that is where probably I would believe most of these banks would face a challenge, because they need capital, they need to build the asset base, and they need to be profitable even at that enlarged asset base. So in my view, be it a DCB Bank, be it a Karnataka Bank, to an extent RBL Bank, I think scale should be the big challenge for them in the coming year.
Yeah, so then therefore is DCB Bank, with this ongoing correction as a result of the reaction to the results, present at any point of time on a price to book an attractive entry price?
See, price to book may be a little misleading according to me, because what happens...
Okay, so whatever valuation metrics, what I'm trying to figure out is when does DCB Bank become an attractive bet, if it does become one?
I'm not sure it does. See, as I said, if I was to really bet on a bank, I would still bet on RBL Bank in the smaller space, where I believe there is some kind of a traction to actually scale up the asset book. DCB and Karnataka, I'm not too sure, even Federal, as you pointed out, I'm not too sure what is the kind of capacity they have to scale up their asset book in a very big way. So I would probably still stick to an RBL Bank in the mid-sized banks. Otherwise, I would believe there's a lot more value left in the larger banks space.
Okay, I just want to bring up Shree Cement at this point in time too. It's down considerably. It's taking quite a knock right now. It's down as much as nearly 5%. And of course, the fortunes of the stock have changed only in the last couple of hours. It was largely flattish throughout the day. And I'm told this is the largest fall this year for Shree Cement. So something certainly going on. And well, currently it's lost around 800 points. Let's take a look at whether or not we can get a chart check going on. Sumeet, are you tracking Shree Cement at this point in time, a little over, should I say, 16,300? What's your view here? How are you, what would you do and what levels would you watch out for when it comes to Shree Cement?
Immediately, those who have taken sell positions in Shree Cement, they can hold on the existing sell positions, because today's sell-off is with good price action. It seems that the same can continue, and on lower side we can see levels of around 15,900, or even there is a possibility that we might see extended fall till 15,500 levels. Those who have taken sell positions at high levels, they can trail the stop loss and carry the sell positions for the targets of 15,900, 15,500 levels. On higher side, it has resistance at around 16,900, 16,800 levels. Once the stock is able to break these levels on higher side, then only we will see a fresh upside move. Till the time these levels are not taken away, we can see some selling pressure for next 1 or 2 days.
Interesting. India Cement too is down about 5 or 6% now, knocking on the 2-digit mark. Jet Airways is down 8% at 304. That one has certainly corrected thick and fast. Actually, a trade on this, Brijesh, Jet Airways?
See, if I talk about Jet Airways, 305 right now has been quoting on the daily chart. The stock has been moving down. Previous swing low has been broken, followed by the lower bottom formation on the oscillator on the daily chart, which is giving a negative view. At this juncture, or say somewhere on 309, one can take a sell call with keeping a stop loss of 300 and somewhere around 12 to 13 juncture, and downside I'm looking 295, 298 level.
Very interesting. Just a lot of pain points, Hari, in the mid-cap end of the market. No apparent news, and we'll talk about Jet Airways and what it's ailing tomorrow in detail. But at 300, it's lost almost all of the sheen that it had. Would you bet on aviation first? And if so, relatively, what is the better bet and why?
See, honestly, I think aviation is slightly, I would believe, a dicey game at this point of time. Because
of crude?
Because of crude, largely because of crude. Because, ultimately, if you look at the ATF prices, I think in the last 1 year, they've been literally vertically up. So I think that's taken a toll on as far as the profits is concerned. The good news is that I think the market is growing at about 20-22% on an annualized basis. So I think that's the good news for these companies. But then the whole problem is when you're going to have a negative spread between your RASK and your CASK. So, expanding market actually becomes a negative problem for like what we saw in Kingfisher. So when Kingfisher had a negative RASK to CASK and the market was expanding, they were actually losing money for every passenger who was flying on Kingfisher. So that's the problem in this kind of a year. Honestly, if you ask me, I would still believe that Indigo is a stock I would be more comfortable buying, notwithstanding all the engine problems they've been facing in the last few months. A stock I think I'd still be comfortable buying, but honestly, I think aviation is something I would still stay off at this point of time. Unless, of course, crude comes below 70, I don't think aviation is a great idea.
Okay, so that's the view on aviation companies, of course, which have substantial exposure in terms of movements when it comes to crude. That said, let's bring up IGL because that's actually one of the few stocks which are gaining in trade right now. It's up as much as 4.2% as we speak, and it's advancing along with perhaps some other city gas distribution companies. Brijesh, how are you viewing IGL and levels that you can watch out for if you were to go long at this point?
See, the stock had made a base somewhere around 240 to 43 junction. From there, we have seen a bounce back. Right now, the candlestick formation on the daily chart has been bullish engulfing, which is again giving a bullish sign. It is near to the edge of breaking a trend line breakout, and further, upside can be seen to the level of 275 to 278. Right now, the stock has been trading somewhere around 263. The stock has a support, immediate basis support at 258. Important support is 252. So it, for the momentum to continue higher side, it should not break 252. If someone wants to play for a BTST sort of thing, or say for a very short term, keep a stop loss of 258 and look for the target of 270, 272. Somewhere around 280 would be the tough resistance to watch. So the ideal level for 280, if it trades above that, then again say 10-15 rupees can be seen. But I am looking stock at least 275 level.
Okay, 3:20 that time of the show when it should take in closing strategies from our experts. Sumeet, to you first. Your top closing strategy today.
Let's see, most of these stocks are showing breakdown. I think immediately it's better to take a sell positions. Now looking at the chart, it seems that Lupin is weak and most of the pharma stocks has given some correction from higher levels. Lupin can give some fall from present levels. So for a trading perspective, those who have taken sell positions in Lupin, they can hold on the existing sell positions. And if anyone wants to initiate a fresh selling positions for next 1 or 2 days, then they can go ahead and initiate at the current market price for the downside target of 800 and 790 levels. And on higher side, it has resistance at around 830 levels, so that should be the stop loss for fresh selling positions for the downside target of 800 and 790 levels.
Okay, Brijesh, what about you? Any ideas that you like to play for tomorrow?
See, I'll go with STBT. The MRPL, it has broken its previous swing low of 76 rupees. It's been trading somewhere around 73.5 or 74. So one can take a sell call and it is keeping a stop loss of 76. Look for the target of 70 as a first, but 68, 69 are the important support zone. So somewhere around 68, one can take a target as such.
Interesting. Okay, there's some queries that are coming in. Actually, a bunch of people of late have been talking about what's happened to some of these commodity names, the high flyers. HEG Graphite will still have been holding strong. But Hari, a stock that's seen enough pain points in the last 3 odd months is Rain Industries. Looked very promising. The numbers looked all right. Somehow, somewhere, your story's just unraveled a little bit to my presumption. But if you looked at it fundamentally, what is your thought here?
See, I've actually tracked it for a long time. In fact, from the time it was at about 125 till it went all the way to 400, I've been tracking the stock quite closely. And I think the area that they are operating in is a fairly, I would say, lucrative and a competitive area. So I don't think product-wise there's a problem. I think the only issue could be that the stock probably rallied a little too much in a very short span of time, and that could be the reason the stock is coming under pressure. See, HEG is a slightly different ballgame, because,
of course,
because HEG is actually linked to the fortunes of steel, and we are looking at a massive expansion in steel, so that's a different ballgame.
Different, yeah.
So
Rain.
Rain is essentially a commodity. So I think that's the whole issue, and it's essentially price driven. So I think the whole worry is that probably the stock has rallied too much, and the price movement actually may not be able to sustain that kind of stock price movement. So that is probably what is putting pressure on Rain Industries.
Yeah, I'm just thinking out, Hari. This is this year's performance, and Rain Industries has come off 53%, and this is from not the highest point. From the highest point, it's probably corrected 60%.
Yeah.
So I can understand the stock running up too much and therefore correcting 20, 30, 40%. This is a correction of almost 55, 60% from the highs. So is this pricing in some negatives, or is there something that is happening but which we may not be completely aware of and the results might show?
Probable. I think we have not seen any negative in the results still. So as of now, I don't think we've seen anything negative in the results, but we'll have to wait for the next couple of quarters. I only hope it is not something like, Wakarangi or PC Jewellers, where there is some major corporate governance issues, but that's something we would probably come to know when the auditors resign. But I think as of now, I don't see anything negative as far as the results are concerned. In my view, what is probably holding against is it's a commodity and the prices rallied too much. I think it's probably giving away. And if you look at it, even at these prices, it's about 60% more than what it was about 1.5 years back. So it's not that the stock is not doing well, it is still done well. But if you compare it to the peak, yes, you are right, 70% down. So that's a worry.
Very interesting. But you wouldn't go out and buy it, right?
No.
What about HEG and graphite,
yes,
by the way?
Yes, I think HEG is something we continue to be very positive on. The kind of steel expansion capacities that are coming up, I think this builder of electric arc furnaces where you know that there is going to be a demand. Whether ultimately steel companies make money or they don't make money, the electric arc furnace is still going to make money. So I think that is a very, very good position to be in. I wouldn't really put Rain Industries in that league.
All right. Okay, so the selling has certainly intensified in the last 10-15 odd minutes. The Nifty is trading in near days lows right now, and the top 5 losers on the Nifty, that is something like a Dr. Reddy's and Tata Steel along with Tata Motors, are only lower, trading at these lows as well. So there's no doubt about the fact that today is turning out to be not such a great day for those who are long in the markets. That said, when it comes to the broader markets, again, the case is not very different. So your mid cap and your small cap indices is where the selling is a little more pronounced, and that's the reason why both your small cap and the mid cap indices are taking a bigger hit than your major indices. Again, in terms of some of those losers, there is more weakness in something like Jindal Stainless. Now that's starting to come up. We have Welspun Corp, that's down around 9%. Reliance Capital, that's down another 9%. And ITI is also losing out by as much as 8%. Not too much to speak for, but there are still a handful of stocks out there which are holding out. One of them, of course, is Vinati Organics. It's a relatively smaller market cap stock when you compare to some of the other players out there. Mr. Harihar, do you track Vinati Organics?
No.
Not at all, okay. All right, in any case, there you have it. It is trading in the green. And of course, you have a bunch of IT names, so namely Mindtree, L&T Technologies, and Tech Mahindra. These are the 3 names which are advancing in trade when it comes to the NSE 500. But on the whole, not looking too good. May I take your view on the mid-cap IT companies and something that you like here?
Quite a few. In fact, I think we find that companies that are probably into businesses like what Hexaware is, companies like NIT which are more into education. I think those are the kind of names that are looking good in the mid caps. And also we feel that within the mid cap IT space, the valuations are still not as steep as what it is in the large cap. So probably a Mindtree, I think I would still be more comfortable buying it compared to a TCS. TCS is a great company, but I think the valuations are just a little too steep. When I look at the P ratio at about 34 or 35 now, I think it just looks too steep. So probably yes, I would be a little more comfortable buying mid-cap IT. My picks would be probably a Mindtree, NIT Technologies, Hexaware. I think those would be the top stocks we would look at.
Interesting. Just before we wrap up though, Sumeet, quick 20-second answer. Sumeet, I don't have time. Nifty Bank down 1%. Would you carry home the short positions?
Yes, we can carry the short positions because it has broken the support levels of 26,700 levels, and now from here on there is a possibility that we might see fall till 26,500 levels.
Okay, and Brijesh, short positions in Reddy's and Sun Pharma. Dr. Reddy's now down 10%. Would you carry home the short positions?
Definitely, with the increase in volumes, it indicates there would be further downside in Dr. Reddy. So definitely one can take a short position in it.
Okay, so we're likely to see more weakness, of course, coming through, especially with something like Dr. Reddy's, Lupin and Sun Pharma, which are trending lower. But, without talking any further about the benchmark indices, I'm just going to toss it over to Neeraj, who's going to tell us a little more about how the day is panned out. Neeraj, over to you.
Yeah, well, the market wrap with both me and Agam. And starting off on a weak, ending on a weak note, the Nifty and the Sensex. But the Nifty Bank seems to have just started off a fresh bout of selling in the last 15 minutes and therefore down 1%. I shudder to think what's happened to the mid caps and the small caps. They were down 2% at the start of the show. 3.2% for the small cap index, 2.5% for the mid cap space. So the carnage out there just doesn't stop. You may have the Sensex perched in and around the highs, but the mid caps and the small caps, boy, they're taking a battering of just another magnitude right now. Let me talk about the large caps though, and Agam will bring you up to speed with all that's happening at the non-index names or the non-nifty names. Tech M 2% higher, Infosys about 1.25%. Must say it cooled off quite considerably from the highs of the day. There's strength in HUL ahead of the numbers, so good going there. HDFC about 1%, ITC about 0.5%, but few and far in between the gainers. The losers, Dr. Reddy's 10%, Tata Steel 7%, Lupin, Sun Pharma, ICICI Bank, Tata Motors, a clutch of reasonably heavyweights or lightweights, but some strong falls that have come in. There is a competition for being the top 3 or 4 contributors to the Nifty fall today. ICICI Bank will probably win it, and Reddy's might be a close second, but then a lot of others really trying to be on that list because the cuts are strong and the cuts are on very high volumes. Agam, what about the mid-cap end of the market?
Well, needless to say, Neeraj, that the advance decline ratio will not look good right now, but I am going to start off with 2 gainers on the NSE 500. The first one is Merck, and that has advanced. In fact, it's one of the few gainers on the NSE 500 at this point in time, and as a matter of fact, it's ending at day's highs. So some positives coming through, and the second one is IGL, among the city gas distribution companies. IGL also advancing, and also one of the few stocks which are ending the day at highs. That said, when you consider the weaker counter, Speechley Jeweler taking a knock, substantially weak through the course of the day, down 26% right now, and well, it's back below the mark of 90 at this point in time. Den Networks is the other one. We've already spoken to Saloni about it. There is more weakness in Den Networks, down as much as 16%. So these are one of the few stocks where the selling got a little more pronounced towards the end of the session, and it is the same for NCC as well, trading near day's lows. Finally, DCB Bank. Not too much to speak for when it comes to earnings, and well, it began the day on a weaker note. That's exactly how it's landed up. It's down by as much as nearly 11%. So on the whole, not looking too good when it comes to the mid-cap indices again. And we are going to bring up the advanced decline ratio in just a bit, but I reckon that the intraday graph will also not be that great.
Oh, not at all. Actually, while you speak about it, let's get the advanced decline ratio. It was what, 1:4 when we started the show, and yeah, similar actually, 1:5, worse than 1:5. It's really gotten decimated today. The breadth is probably the worst, Agam, that I've seen in the last 6 days at least.
Right.
And definitely worse off than what we saw on Thursday or on Friday. So there has been some serious selling today. Must say, while we haven't quite looked at Europe currently, just bring up what the European indices are doing as we shut shop, just to see if the selling pressure got really exaggerated by virtue of what's happening at the global end of the spectrum as well. So FTSE, CAC, DAX, all 3 will come up on your screen. DAX about, well, maybe 0.25% higher. FTSE and CAC too, I reckon, well, not celebrating the World Cup victory, I say. And FTSE, yeah. So, yeah, no big pressures out there at the global end of the spectrum. Just that our own pressures about the broader, about business, which what the market breadth has looked like in the session today, Agam.
Right, I was actually wondering if there is substantial evidence in turnovers. At least at 1:30, we really didn't see too much, and it's actually not too much. You know, when it comes to the NSE and BSE cash turnovers, well, largely average, I would say. And again, we're about a week and a half away from expiry, so the NSE F&O turnovers also are largely average at a little less than 6 lakh crores. And if we could actually bring up the contributors among the big stocks which actually, well, were bearing down on the indices, it's once again Reliance. You know, Reliance usually leads either on the gaining end or the losing end. This time it's on the losing end. It's contributed 28 points decline today. It's ICICI Bank and Tata Steel, along with the Sun Pharma and several other pharma stocks. HDFC and Infosys, of course, on the other hand, are up and about, followed by ITC. Infosys, of course, well, it did advance by as much as 3% at one point in time and did come off from day's highs, but on the whole, it's likely that ICICI Bank, along with Reliance Industries and Tata Steel, is what's bearing down on the markets.
Yeah, so the contributor list, not too pretty. Reliance stands at kind of at the top of the list, but you know, if you just extended this to maybe 4 or 5 stocks more, a clutch of these pharma and commodity names would have been right out there. Not a pretty day at all, and suffice to say that it doesn't look like the carnage will stop here because the cuts were fairly deep. I'll be looking at the delivery percentages very, very closely in the session today as well. Anyways, final thoughts from all our experts. Brijesh, in light of how we've shut shop today, what levels do immediately come about? Not necessarily on the Nifty, but maybe on the Nifty Bank, maybe at the mid-cap indices.
See, as I said before the show started, 26,600 would be the first level to watch for the Bank Nifty, followed by 26,450. So that 26,450 is a level for a short-term traders to be watched. If it breaks, then further downside can be seen. Regarding with the Nifty, the previous swing high that was 10,929. From there, we have seen a rally to the 11,070 or plus that. So that had been, it's near that level of say 10,929. I think that level would be getting broken in coming days. And the support would be, as I said, 10,770 would be the level which I would be watching very closely. So if it holds on, then again, we can see a pullback to the 10,990 odd zone. Even if I check about the indices, pharma followed by metal, they are the major contributions for the selling side. I think this rally would be continuing more.
Okay, and Sumeet, the Nifty is closed just about 10,900. Your view?
I think it's better to wait for the confirmation for buying positions. Breakout above 11,000, 11,020 will initiate fresh longs. Till the time these levels are not taken away, it's better to avoid long, and on downside there is a possibility that we might see 10,900 levels. And if by chance these levels are taken away, then we can see extended move till 10,850 levels. So for next 1 or 2 days, it's better to avoid long positions till the time resistance is taken away.
Okay. Mr. Harihar, finally, the market is weakening as we can see right now, especially when it comes to the broader market. So at this point in time, would you advise waiting a little longer for the names that traders have thought about that they want to get into, or investors? Or would you say that you should start buying a little at this point in time?
I would believe yes, because here is a market that touched a new high at a time when the whole world was talking about trade wars and crude prices. And at the end of the day, what is the Nifty? It's 6 stocks that move the Nifty. And fortunately or unfortunately, the 6 stocks have been doing very well in the last 2 or 3 months. So I would believe as long as those 6 stocks do well, I don't think Nifty has much to worry about. The bigger worry in my view is the mid-cap and the small-cap space. I think the damage there seems to be a lot more structural because the kind of advantage they had in terms of valuations aren't justified. So I think that the damage is more structural. So be cautious in mid-caps. But I think front lines, I don't see much of a problem going in and buying at these levels.
All right.
Well, that says it all. Gentlemen, all of you, thank you so much for taking the time out and joining us today and giving us your thoughts. Really appreciate your time. But with that, it's a wrap on this edition of Countdown from Agam and me and the team that put this show together. Thanks so much for watching. We wrap up the day's action on the market wrap with Agam in just moments from now.